The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 122. You get the NASDAQ up 97. S&P's up 21. Gold contract down $9, trading at $17.26 an ounce. You got silver off 8 cents, $15.18 an ounce. Light sweet crude, man. This is something else. Down $4.46, $12.48. Bottom line, folks, is that 650's game again. Hard to comprehend, but bottom line, guess what?
I thought we might have been out of the woods, man. Not so much.
I'm telling you, man, Tom,
Oof.
I can't. It's hard to comprehend, folks, when you look at the Bloomberg now that you have oil down $4.43 and you're trading at $12. It's like, really? You know, it's like,
you know what I was thinking about is things felt great at the end of last week when it felt like we had found a bid somewhere between about $16 and $18, and you felt like, oh man, that's awesome. Order is restored, right? And all we wanted was an oil in the high teens, and you can't even get that, man. We just hit an 11 handle already today.
it's amazing, man. I mean, and it shows, the bottom line, folks, is that it shows we have way too much oil. And what I think we all have to understand is that how many millions of barrels a day that actually gets produced, and you know, you gotta get back like 30 million. They gotta bring this back so dramatically. It's amazing, actually. So
yeah.
Notes and bonds. You get the 10-year right now down 14 ticks, 138.21. The 30-year off a full point, plus 8 ticks at 180.24. We get the Fed. It's a one-day meeting, Wednesday, 2 o'clock. They're going to come out. We'll see whether they're going to go negative, go to zero. They're at 0.25 right now, folks, on the short-term rate. So, where are they going to go?
Yeah, I agree. It'll be interesting to see what he has to say. Press conference, one of the more anticipated Fed conferences around in terms of what he has to say for questions. A question-answer period with a lot of volatility, a lot of angst out there.
Amazing. King dollar down 364 ticks, trading 100.10. You get the euro right now at 108. That's catching a bid on the top side. We get the yen at 107.19 and the British pounds at 124. So big numbers coming out this week. I mean, I heard you.
Pretty cool, right?
Yeah, the amount of.
We're going to find out everything going on across the whole globe, man.
Yeah, it's a big number. There's no doubt. I mean,
why don't we cover it real quick? Only because for the archive, I covered it at the top of the hour. But man, I mean, you get Google, Alphabet, their parent company on Tuesday, Facebook, and Microsoft on Wednesday. Also, you can't even fit all the companies like this one graphic that I have up there. You also get Tesla and you get Boeing on Wednesday, and then you get Apple and Amazon on Thursday. Just for the giants, let alone I think it's like 140 to 150 companies, almost 1 out of 4 or 1 out of 5 companies in the S&P. We'll pull it up, but big week for sure.
Monster. And, talk about a monster, folks. Tesla's a monster, man. It's just, they're buying Tesla out here this morning. It blew away its swing point of 774. It's going to be an ABC up. It's going to be a confirmed ABC up. We already get 5.7 million shares, and you only need 13 for an ABC up. So it looks to me like this high volume high of 968 is probably game, man, which is just
amazing.
It is amazing. It's
amazing.
So let's do the ABC up. So 774 is your B. Oh my God, look at this. 446 is your A. Okay.
What's that? 330 points.
And then you see, oh man, that brings it over. That's $1,000. It's like
$1,000.
It's $1,000. And why not? Let's go.
Hey, we were just at 968. We were just at 944.
Yeah. Call Basil right now. Okay, we're gonna get that even number.
$1,000.
We're gonna get that even number of 1,000, man.
Penny. Perfect.
This will be crazy. You know what, man? I can't wait to see what happens here because, 968 is the last high, folks, okay? And you talk about deviance, okay? It'd be like, okay, really? Gas is going for nothing.
Yes.
The bottom line is that Tesla's going to the moon. And, I've only been in a Tesla once, but I'm impressed, man. I mean, Tesla is probably like when the iPhones come out. I mean, it's
sure. It's a similar comparison. Sure. I mean, they're changing a lot. They're changing about how our daily lives are changing, how we and they're doing it in a sleek, cool way.
Yeah.
To gloss it over. But hey, can we jump to Microsoft real quick?
Yeah.
So Microsoft, and I'm not sure if you heard me in my program, it's pretty cool. So you have the NFL draft going on. Thursday through Sunday, right?
Yes.
I'll pull this up. They had huge numbers, which is I'm going to get into more of the technology and how smoothly everything went. It's based a lot off of the Microsoft Teams.
Okay.
So the Microsoft team served as the primary line of communications between the NFL and its franchisees, as well as how official picks were submitted to the league. And some teams chose to also use the Microsoft technology for their quote-unquote virtual war rooms. Did you catch any of the drafts by chance?
I didn't. No.
So it's, as a sports fan, ESPN, they've been showing a ton of great old games, but nothing new. It was the one time that you really had live action going on, and the numbers showed. So 55 million viewers tuned in to the draft.
55 million?
Now this stretch from Thursday, Friday, Saturday, Sunday, but you got 15.6 million just Thursday night, and that, of course, the first round, the big picks, the top guys out there. But you got how about 12.4 was the record high previously, 15.6, and it kept going, man. They still got 8.2 million viewers watched rounds 2 and 3. Big numbers, but the real thing that I was going to talk about here is just how well Microsoft did. Think about what you had to do, right? You had 32 NFL teams.
Yeah.
You had the coaches were usually on camera. You had the general managers on camera. You had maybe some player personnel. You had the owners. You had Jerry Jones out on his yacht. You had Bill Belichick in Nantucket. And then you had all of the analysts for ESPN and doing their, and then you had the players. Then you have the players at home. And all of that coming together pretty seamlessly, man. Microsoft behind it all. I didn't know that until this morning. I was already thinking how seamless it was that they were doing all this and what the control room must look like. Can you imagine how many inputs they had in terms of video feeds that they were going to go to? And pretty cool to see that all. And that's, I think, one of those things where we were already there having the technology to make these types of transitions, and it's just vastly accelerating everything. It was pretty cool to see. We all do. I play fantasy football, right? We do our draft that way. Okay. The NFL is right there now. I see you checking out Zoom. I mean, quite the acceleration for them, of course. They pulled back on the heels of, was it Facebook coming out or Microsoft?
It's Facebook. Facebook, bottom line is going to, try to basically recreate Zoom, which is going to be pretty easy to do for any big tech company, right?
Yeah, we talked about it ourselves the day or two before, saying, number one, nobody really pays for Zoom because you can use it for a free service on a decent level. And number two, you're not telling me that Facebook or Microsoft or Google is going to be able to compete in that space pretty quickly? Yeah.
Yeah, there's no doubt. Let's go look at that gold market. There's smoking gold out here. You got it down $12 now. I think it was down like 15. So 17.20. Yeah. So let's see what we got here. Yeah, you're just pulling back. You got light volume. And this is where this gets deviant too, folks, because the dollar couldn't hold price last week, and the dollar's pulling back too. Stay right there. Tommy and I coming right back, coming right up. Dow up 158, NASDAQ up 106, S&P's up 25. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 184, Nasdaq up 112, S&P's up 27. We got to get over to our man, Mr. Basil Chapman, Tom. We got the Tesla out here. It has a shot to go to $1,000. Basil, what's going on, brother?
Getting there.
Good, man. I'm telling you, Basil, it's hard to comprehend that we got an ABC structure in the way up, but it's like, you know, your round numbers, man. It's like, okay, man, is this thing going to hit 1,000? It'd just be really cool if it did, you know what I mean?
But, Tom, this is the interesting thing. You always talk about a diverse market. What if I said to you, we've got a coronavirus epidemic, pandemic, there are no cars being sold. Things are, at the showroom, you can drive by showrooms, there's just nothing going on. Crude oil is at one of its lowest points that we've seen in decades.
Right.
Where do you think a battery-operated car would be at this particular point?
Oh,
Isn't this when you talk about diverse, I mean, look at this.
Deviant, yeah, right.
Deviant up 69 at 794. And if I say to you that Tesla, of all instruments in the market, on the 3rd of March is at 806. Where do you think it is now? Would you turn around and say 794, almost back to where it was? I wouldn't be thinking that. So that's the whole thing about doing technical analysis, doing what you do. You look at volume, looking at these different ABC structures. Sometimes the technical aspect completely negates what you feel emotionally. And this is what we're seeing.
No, we're seeing it in these markets, man. There's no doubt about it, man. Pretty wild, man.
And just look at this monthly chart. The monthly chart. Look at this candle. Of course, we've got another couple to go. We go until your webinar on Thursday, right?
Yes.
So that'll be the end of the month. A great day to do an all-day webinar. Look at this candle so far in March.
Yeah.
So you can never tell. You have to sometimes separate news completely from and we're looking at the internal. We're looking at the the X-ray or the MRI of the patient.
Yeah.
And this patient is looking pretty good right now.
Pretty wild.
You couldn't believe it. I mean, as you were saying that, where Tesla is, and definitely the way it's acting now, if it's able to close the month of April at a level that is beyond where it was trading in that early part of March, that 806 area, I think that's a good sign.
Right, because you know, so if you're watching Tiger TV, folks, Basil, so on the monthly, Tesla's only in a B, right?
That's a leg.
Oh my
this
God.
is a peak B. And the peak B started at the low that was made back in June of 2019 at 176. So 176 to 968, let's go to 969. That is multiples of a level of an electric car that, they have some problems with some of their the gullwing is not all that great, and yet at the same time, people love it. When you speak to anyone with a Tesla, no matter what happens, they love the car.
No doubt.
You can understand why. I mean, it's
gotta love it. Well, listen, man, Basil, thanks for checking in. Really appreciate it, man. We'll be watching that wave, and of course, we look forward to the show at noon.
Thank you very much.
Thanks, man. Have a great one.
Thanks, Basil.
Man, it is really hard to comprehend, Tom, how this thing has gone. Oh, I think it's up 100%, right? Yeah. I mean, we were at 350, you're at 7, you're at 800.
Yeah,
man.
coming from 968 down to 300 and change, back up to 800 almost, right?
It's unbelievable.
It is.
Serious business, man. No two ways about that. And then, so we got the Fed Wednesday.
Yeah.
We're at 0.25. We'll see, what this is going to shake out, folks. It seems to me, I mean, every day, I think we're all getting a reality is, okay, how many months do we have, before you basically start kicking in again? I was watching a movie last night. I probably shouldn't have been watching it at this particular point, because you know what they did, folks? If you want a great history lesson, even if you have young children, all of us, they took the World War II and they made it in color on Netflix, Tom.
Okay.
And it's just a great history lesson also.
Nice.
But what they shows there, this is what's really wild, folks. So they go back to World War I, and what they show that in every type of jolt to economies, that's when you get these folks that, basically, can change the world in a violent way.
Okay.
And a big deal. And then they were showing that, so check this out. The number that I thought was like pretty scary. Now the difference is that, we have the unemployment that's happening out here, but people are getting paid, was that in the Depression, at the peak of the Depression, 25% of the folks didn't have jobs. Well,
yes.
We're going to have we're almost going to be at that number, man.
Yeah, we're basically there, right.
Yeah, that's a pretty intense number, man.
Yes. And we got there in 5 weeks as opposed to just months and months and months. Yeah.
Yeah, and then the real question is going to be like, how do they open back up?
Yeah, and hopefully, it's something that over the course of 6 months it all comes back, or over the course of a year it all comes back pretty quickly. Retail just wiped off the board, so hopefully it's some type of a V rebound because it's just so drastic.
I know.
Yeah.
More I'm thinking about, it looks to me like it's 2, 3, 4 years. I think it's going to come back, but what I mean by that, folks, is that it's just like 2008, 2009. When you get this much damage, it'll come back, and there's going to be a slow deal, but not for people to get confidence back to really start spending money. I think it's going to take that long. So.
I agree in some part. The hope or the really the hope at this point is, when we get some type of vaccine, maybe it's in a year and a half and 2 years, and can you imagine almost a worldwide celebration if this is something that, you don't want to call it eradicated or how it works, but you could see an acceleration like nothing else, man. Can you imagine the first time that hockey games, concerts, baseball parks, all of that opens and everybody, it's nothing akin to celebrating winning a war, I imagine, but as my generation, seeing all those, whether it was World War II, right, everybody comes home and it's just jubilation.
Right.
It's going to be some degree of that when this is, a vaccine's out there and it's gone and we don't have to worry to that degree. So hopefully, as in, even if it goes that year and a half, 2 years, hopefully that just pops it right back into things with a huge acceleration when we get to that point, which I imagine we will. But it's going to take.
We will. But it's a head game. That's my point more than anything.
I agree.
It's definitely going to be a head game as to what we are comfortable with.
Yeah, and that's why I think you'll see a slow progression until we really get something like that. And then hopefully, though, it accelerates just as quickly as it pulls back when we do get that drastic difference of things really changing with a vaccine or a treatment or something that we don't have to be worried about big events, because we're going to be worried about big events for a long time, travel, all that stuff.
Oh, yeah, big time.
Yeah.
Excuse me, folks. Dow up 212, Nasdaq up 99, S&P's up 27. We get the gold down 1180. Notes and bonds, they're moving lower. You got the 10-year right now down a half a point, the 30-year off a full point. Stay right there, folks. Tommy and I come right back.
Folks, this is Tom O'Brien. On Thursday, April 30th, I'll be holding an all-day online seminar where I'll teach you the essentials of my trading methodology, Timing the Trade. From 9 a.m. to 4 p.m. Eastern Standard Time, with a lunch break from noon to 1, I'll be covering quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and much more, all while the market is open in real time. When you sign up, I'll mail you a physical copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. You'll also receive a free month of my daily trading newsletter, Market Insights, a $169 value. This 6-hour online seminar will be archived if you can't attend the entire day live. My Timing the Trade webinar is taking place Thursday, April 30th, so don't wait to sign up. For all the details and to sign up today, visit the front page of TFNN.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 219, Nasdaq's up 95, S&Ps are up 27, and we got to go back to USO, Tom. Okay,
it doesn't stop, man.
This not only doesn't stop, folks. Okay, but this is like one of the biggest messes I've seen in the marketplace in a long period of time. Now, that being said, there's definitely professional traders that basically having a field day with this.
Yes.
So picture. We have gold, oil down $4 and something, right? Well, but the bottom line, folks, the biggest owner, percentage-wise, of the June contract was the U.S. oil fund. So what do? They, bottom line, they come out and say, hey, guess what? We're going to sell out of the June position. So what do you think's going to happen, right?
Yeah.
This makes zero sense, folks. Okay, so here you go. The $3.6 billion exchange-traded fund is going to move its June position from Monday through April 30th. Really? This is about as bizarre as you get, man. That you own the biggest position in a contract. You're telling the market you're selling it, right? Do you know what the big banks are doing, folks? Okay, they're having like a field day with this, okay? And if you're wondering why it's coming down so fast and furious, that's probably one of the reasons. It announced that it will move its contracts forward over a 10-day period beginning May 1st, but it hasn't disclosed which will be affected. Oh, really? You only have really 4 liquid contracts to deal with. You have 12 contracts, of course, folks. Okay, but the bottom line is that you trade every 3. Well, no, oil. No, that's right. That's right. I'm wrong on that. Oil trades every month. That's right. So you do have rolling forward 12 contracts. Bottom line, this thing is a mess. Has been a mess. Is a mess. Today, you're down 40 cents. It's breaking lows. Now you got a NAV intraday of 209, and you're at 217. So. This thing, what has happened here, if you're wondering, folks, it's hard for me to comprehend that the SEC is actually allowing this on a continual basis to change every day, and you have so much money invested in it. The SEC is supposed to protect investors, and the bottom line is that this is protecting no one, so... let's wake up in the morning and the rules change every day on this thing, man. So,
exactly.
And they have that in the perspectives. That's what's going on. So I understand, folks, they have it in the perspectives. They can change every single day. But it's like, do people really know that? I'd say no. If you bought an Apple, you can change every single day. I'm going to sell different things. I'm going to buy different things.
Hey, did you see the story? Did you send it to me, or was it just on Bloomberg? I have it up here now. Bank of China client said to lose $1 billion on oil bets.
I did send you that. Yeah.
How cool. So this contract, you want to talk about getting hosed, man. Retail customers. Now, at least the USO. And it worked last month. We'll see if it works this month, though. And that's probably why they're getting out of it right now, is because the USO at least rolled 2 weeks. It's in the Frank contract, right? But they'd roll it out 2 weeks ahead of time. Now, everything has changed, but at least before everything fell apart, they would at least roll out like 2 weeks before expiration, because they just wouldn't give you the expiration price, okay?
Right.
What happened in China is retail investors, they got the expiration price. The losses stem from the bank settling May West Texas intermediate contracts that underpinned its, and I love the name. This is what made me think about it, the SEC, because my friends and I were talking about this. You're not allowed to name products in the U.S. With the name Treasure within them, and they call it the crude oil Treasure, and it expired April 20th at minus $37, leaving Bank of China customers caught in the middle of that unprecedented collapse below zero. So they got minus $37 a barrel, and I started to think, that slide, right? All of this had to do with that. Can you imagine people in the know, even in China, knowing that you're going to have funds that literally have that price going to get pinned to it? Talk about max pain, man. But a remarkable move there, and that's why you see the need for regulation over and over and over, man, because China, that's the retail customers, and you have an uprising there about talking about that the retail investors are not happy, and they think that the bank should pick up some of that, but good luck to them in China, man. A tough deal.
Yeah.
Right? Exactly.
Man. Not even
from the
close.
Bank of China. Yeah. Good luck.
Not even close.
Yeah.
And then, of course, the you have the large trader in Singapore. That we'll see how many billions that's going to come down. I was going to send. They had a whole map in Bloomberg, folks. Let me see as to all the different companies that this large trading firm actually owns, and a lot of them are banks. And the bottom line is that they don't know whether it's 4 billion, 5. I don't think anyone really knows right now. It'll shake out. It'll come out in the news exactly how big this was, because what is happening is that some of the banks that had collateral, and this is where it's going to be like a scandal. They thought they had the collateral, and then the trading firm sold the oil to their pipeline firm. So the bottom line is that now they're going after the pipeline firm to see how many billions that they hope they don't lose. They know there's going to be billions, but it just matters how many billions, Right.
That's quite a question when that's the question at hand.
Yes. Yeah, no doubt.
Right.
Let's take a look at some of the higher volume equities out here today. You get GE is up a penny. We got Nordic. That's moving. So that's the tanker price, folks. That's the tankers. Those tankers are full in a huge way. Look at this Tilray. Tilray's up $1.25.
I was going to jump to the cannabis stocks at some point, man. They're catching a little bit of a bid.
Let's see what we got.
All of them are.
Canopy's going to be an ABC up. Look at this. Hold it.
It's up 10% today, man.
Oh, this is an ABC up, man. So this is interesting. So Canopy growth, you hit a low out here, $9. You're at 17. You need volume of 10.8 million. You're going to get it easy. We're already 5 million. That's going to be a nice ABC. Your B point 1624. Your A is 9, so you got 724. Your C is 1280. You're talking $20, man.
Could you jump into the news on them and see if there's any action? Because they're all trading higher. It just could be a bid, but they might get some reprieve from that stimulus bill may allow them access. That was kind of the news last week, right? Which would be a huge boost for them, because right now they can't bank. They deal in cash. So hopefully, just all cannabis stocks I'm talking about. That was last week, but just right out of the gates, man, this week. And
so what the deal would be, folks, is that you have the stimulus bill. I suspect there's been a couple stories out there thus far. So the feds, it's still like a serious crime, right? Pot. But because of the stimulus, right, people are speculating at this particular point that it will actually go not necessarily legal, but it would be legal if they're going to tax it.
They could probably take it off the federal schedule, which would then allow banks to not be as concerned within states where it's legal to do business.
Right, and what they're looking for, I guess my point is, what they're looking for is a federal tax on it to bring in huge amounts of billions of dollars. Right?
Okay.
You see what I'm saying?
Sure. That's
the way that, and they suspect because our deficit's going to be so dramatic that that's going to be the next thing on the table here.
Good. Get it done.
Tax it, yeah, right.
That's right. Totally.
The government wants to tax anything that's moving anyway. So Dow's up 207, Nasdaq's up 88, S&P's up 26. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up by 220. You get the NASDAQ up 92. S&P's up 27. Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, good morning, Tom. Tommy, how you doing?
Good, man. Yourself?
Good, good. I have a question on gold. The correlation between the dollar and the gold pound, and also the inflation factor on the gold. Can you explain that for us, please?
So I'd say that the camp is still out, man. I mean, you know, what you have here is that you have the dollar at highs and gold at highs. You know, so the bottom line is that they're going into both of them. That's the correlation. The real kicker is going to be, do we get inflation in an era where, you know, you've got so much price destruction, John, you know what I mean?
Yeah.
Gold, you know, looks to me like we're going to higher price. I mean, the only currency that gold is not at all-time highs is the U.S. dollar, and it's priced in dollars. So it's just showing that the U.S. dollar is the strongest currency in the world. You know, that's what we have happening. But they're buying both of them. That's real. That's how this is shaking out. Go ahead.
I was looking back at 2008, you know, the banking crisis.
Sure.
And it looked like 2 years later, the gold topped out at 1,900. Is this, you think, is going to be like a same thing? After 2 years, we're going to top out?
Well, 2 years is a long time. I mean, it's hard to go out that far. I think gold right now is going after its all-time high, and it's probably an ABC up to like 2,400 or something. That's kind of what my take. And the reason I'm going there is that if you look at these gold stocks, the gold stocks lead gold. And Franco-Nevada's at 135. It's at all-time highs, man. I mean, this is like a rocket ship. And this company makes, on a fundamental basis, makes all its money on the price of gold. Okay? They don't own any mines. They only have 26 employees. It's like a bank, okay? And they take in, this year they plan on taking in almost $1 billion with 26 employees. You know, so when the streaming companies are ahead of the market, which they are, most times that's saying that, listen, gold's running, man. So, And the inflation-deflation fight is going to be a monster one. I mean, the Fed is going to want inflation. Everyone's going to want inflation because a low inflation this is because of the fact that the debt levels are so high. That's what inflation is all about. You know, the Fed always wants 2% inflation, so everything that it basically is printed can basically be paid back at not a huge expensive price. In this particular case, I could see them letting it run to 4% or something. That you're paying back less than you actually borrowed.
And that should drive the gold ounce up.
Oh, if we get that gets dicey. That's a close call, man. Because what does happen is that let's see if the aspect of the inflation run is more than the interest rate, any type of hard asset's going to run. Exactly. Yes, it will. Yeah, and that's what the market is picking up. I mean, this is a different market, absolutely, in the metals market versus 2008, though. Because gold was the last one to go down, which it was in 2008 too, but it got destroyed in 2008, which in this particular case, it got hurt bad, but only for 2 weeks, and then it exploded topside. The gold equities are up almost more than anything, even though outside of Tesla, Tesla's up 100%. There's a few gold equities that are up 100% in 6 weeks. But you have a couple outliers like Tesla and a couple others. But as a sector, those gold equities are up more than anything. So.
Okay, I see. I got you. All right, thanks for the answer.
Okay, man. Have a great one. Have a safe one. Yeah. Is there going to be inflation or deflation? That's the real question here, man. And
I imagine Powell's going to get that question on Wednesday.
He's going to get
something to that degree about inflation, right?
Yeah. I mean, that's one of the biggest deals out here right now. Because what happens is that if we all think that things are going to keep getting priced down, we're really not going to spend any money. If we think that we are going to get priced up, we will spend money hand over fist.
Hey, how about Target? Just in keep with, quite the shock in terms of that market trading down. Target from 108 to 99. And you had to say to yourself, 7% same-store sales, they came out, right?
Yeah.
Their CEO. And they also said, though, people are buying low-margin items. It's costing us more money, the amount of employees. But when that came out, I literally thought of, when Amazon had a recent earnings report before all of this started happening, and maybe profits might go down, but their revenue is always gangbuster numbers. And even when the market reacts negatively, they always figure out, like, if a company like Target, Walmart, Amazon, if they're growing their revenue gangbusters,
right,
it's going to transition, man. I was just shocked to see that was a huge buying opportunity, I think, even in the short term on Target, going under 99, you're up more than 10%, man. When, 7% same-store sales, and you punish that stock down 9%. It's just remarkable what keeps happening.
No, it is. And if we, so this morning, folks, actually, it just opened back up. The Paycheck Protection Program just opened back up. But I heard you on your program this morning. That was quite a number, man. Was it 22 public companies that got $800 million?
I believe it was 200 public companies.
So check this out, folks. That's 25% of the amount of money that went out the door.
Yeah, and there are some cool statistics, not cool, but interesting, you could call them, in terms of, you're going to hear all these statistics out of the administration saying, we had X amount of companies that all got small business funding, in terms of, we had 1 million businesses with under 10 employees or something like that. Only 2% of the loans were to companies that were public. But guess what? And I'm paraphrasing, but it was something like, yeah, you can say that, but of the 2% or something that were public, and it wasn't that high, they took 25% of the money, or 28% of the money. Right. You say only a small fraction of the loans went to companies where they got more than $1 million. But when you add all those up, it was like 25, 28% of the available money, because it doesn't take a lot of companies taking $5 to $10 million, let alone, what do we have? Some of these companies where you have, subsidiaries, you're talking about 70 million, 100 million, staggering, man.
No, it is. I heard that the CarMax deal, man. This is, and I guess these are individually. They must be individually owned, or company-wise, or something. Because that CarMax deal, that was a monster number. Was it 77 million or something? It was like that was like a crazy number, man.
Well, I'll paraphrase. I'm not sure the CarMax one. I'm sure it was, but here are the numbers I was looking at, right? We had 200 public companies, $854 million from the government program billed as emergency funding for small businesses, and that includes $126 million for 3 public companies affiliated with one Texas hotel man, Monty Bennett. Of those firms, you have Ashford Hospitality Trust, $76 million in 117 separate loans, and 11 companies so far have returned $75 million for these numbers, man.
Yeah.
No, AutoNation, that's who it was.
AutoNation,
that's what
thank you.
AutoNation,
Yeah. Right.
yes, and they are a $3 billion company, and they were giving back the money.
And it's wild, man.
And in the cookie jar, man.
Dow up 253, Nasdaq up 86, S&P's up 28. Stay right there. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 275, Nasdaq is up 88, S&Ps are up 30, and one of the targets are bringing this up in the den. There's no doubt. Watch this market, folks, because the NQs are giving it up. Bottom line is that they're a lot weaker than the S&Ps and the NQs. You know, this is what we're coming on to this week. Big numbers, no doubt. As you come over to our website at TFNN, folks, this Thursday, it's here, April 30th. I'm going to be doing a webinar, an all-day webinar. It's a live webinar when the markets are open. It's a time in the trade webinar. Bottom line, it's going to go from 9 o'clock in the morning to 12. Break to 1, 1 to 4. If you want to understand quality volume, the ABC structures, swing points, confluence, all of the above, folks, check it out. What you get with the webinar is you get my book, which is an $88 value, my newsletter, $169, plus you get a great workshop. And we're in an ABC market, whether they're going up or down, folks. They're all over the place out here, so it's pretty cool, man.
Volatility. We should end it with, why not? We'll take a look at the VIX, man. The VIX, Perrin, do you see me talking about that? It's remarkable to think, man, at a 30, we're in 33 now, 33 handle, and you go all the way back to March 5th. It's almost May. We've been above $35 in the VIX for almost 2 months, man. But look at that trend, right? Hard to deny, man. Just a constant all the way from that peak. It's amazing to think the peak was 5 weeks ago of market volatility. It doesn't seem like things are still going crazy, and they kind of are. They're 1 to 2% moves now, as opposed to 7 to 12% moves on a daily basis. But the VIX, Perrin, some of those as things calm down a bit compared to where we were.
No doubt. Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman. Ride that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.